The Federal Reserve is set to announce its interest rate decision Wednesday, followed by a press conference from Fed Chair Jerome Powell. Central Bank in mid-December elected to raise the target range for the Fed funds rate to 2.25% to 2.5% on the back of a strong labor market and household spending. However, investors watching the Fed are more pessimistic about the near-term path of future rate hikes amid a protracted partial government shutdown and far less data available for the central bank to make decisions. With us today, we have Interactive Brokers Chief Options Strategist Steve Sosnick to give his color on what's going to happen with the Fed next week. Welcome, Steve.
Hi, Steve.
Hi. Thanks again for having you back.
Thanks.
I'm very happy to have you here.
So glad to be here.
That's awesome. Okay, great. We'll get into it. What do you see for the Fed doing next week in light of this government shutdown? Do you think they'll do anything?
No. Pleasure to be here. Thanks. I think that's the short answer, obviously. But I think right now the Fed, considering the flack they got in December and the market reaction, I think the Fed is going to be much more market sensitive right now. And there's a huge headwind. And you mentioned the government shutdown in the intro. But that's for real. I saw a statistic this morning from the Council of Economic Advisors. This is actually effectively out of the White House itself, that attributes negative 0.13 per week to GDP for each week the shutdown progresses. So we're in the fourth week now. That's a half a point off the top of GDP, and there were already some worries that the economy was running into some headwinds. So I think effectively this meeting is off the table. I checked the probabilities on Bloomberg shortly before we sat down here, and I think right now the market's giving it 0.5% probability for the next meeting. So let's call it zero. They won't necessarily give it a we'll give it maybe a non-zero number, but the chances of them doing anything are minimal. Even so, as we look out, as I looked out for the probabilities throughout the year, it's funny because a few months ago we were talking about the question was going to be was going to be 2 raises this year or 3 raises this year. Now the market's imputing roughly a 20% chance of an interest rate hike some point this year. That seems to be centered around sort of around June, July, August, that period there. There's not a ton of precision in that, but that's quite a sea change, and I think that explains a bit of the rally we've seen off the lows. I think FOMO explains a lot of the rest of it, but I think the Fed has seemed to have gone to great lengths to be more market friendly, listening to data, and listening to data is an interesting question because you're not getting as much data. That's another consequence of the government shutdown is we're not getting the data flow we counted on. So circling back to this next Fed meeting, economic headwinds, 0.1% a week, let's call it, lack of data for a Fed that's supposed to be data dependent. Where do we go? Nowhere.
Yeah, it's really interesting how this is playing out, and at a time when there's so much geopolitical volatility and slowdown in growth that hampers the Fed in making decisions. Having this government shutdown it's really unfortunate. We thank you so much for coming in again, Steve. Thank you very much for
my pleasure.
In the meantime, select the event calendar option in the IBKR Trader workstation for a full list of U.S. and global corporate events and earnings, dividend schedules, economic data, IPOs, and more. I'm Steven Levine with Interactive Brokers, asking you to enjoy the week ahead.